Hello traders, the title of the video is Energy Sector Analyzing Murphy Oil Stock by using a top-down trading method. Let's get started. We are on a yearly chart. As we can see here, there was a bullish trend. Okay, the bullish trend for Murphy Oil was from 1990. In fact, before that, started in 1985 up to 2008, all right, so 1985, there was a bullish trend that began and ended in 2008. After the bullish trend, we have a correction in the form of, a zigzag one, price went down. That's the first part of the correction. The second part of the correction, all right, and then this is the third part of the correction. Now you need to understand that after a bullish trend, if we have a correction, it does not mean that we're going to have a new trend. So after a correction, we may have a consolidation or what we call a complex correction. All right. So one should not assume that after a bullish trend and a correction, a new trend will surely begin. One should not assume that at all. All right. So we need to pay attention to the reaction of the price right here. Okay. But one more thing I need to say to traders that after the bullish trend, the price after the bullish trend, we have the correction, and that correction has ended in a zone of 78% Fibonacci retracement level of the prior trend. You can see how I draw my Fibonacci retracement. I didn't bring it all the way. You can see here, I did not put it all the way to the top of this candlestick bar on the yearly chart, but I leave it at the closing price. So from here all the way to the closing price, the 78% Fibonacci retracement level is at 1998. Note it down. You can see that last year in 2016, the price came down to the zone of 78% Fibonacci retracement level, and there were buyers here. This is what we call the story of the stock market. So price, there was a trend, all right, this is the story of the stock market. There was a trend, and then we have a correction, 1, 2, 3, bringing the price into the zone of, 78% Fibonacci retracement level. Whenever a financial instrument pulled back to the 78% Fibonacci retracement level, it is considered as oversold in theory. Now, repeat, in theory. Now, one should now go to Google Finance, check the financial, perform Google Asset Test, check the cash flow, and see what is happening for this currency pair, this not currency pair correction, to this stock Murphy Oil Corporation. So perform Google Asset Test, check the cash flow at Google Finance, all right, and check the economy news relating to this stock, all right. You want to understand also that this is about crude oil, and the crude oil was bearish for 2 years, is now bottoming, all right? Will it continue to find support, all right? So if crude oil finds support and become truly bullish, this stock will benefit from it. But if crude oil continue to go down, it will also influence Murphy Oil Corporation. Though in theory, this stock Murphy Oil is considered as oversold because it's now at 78% Fibonacci retracement level. Is considered oversold because that's 78% discount. So the price went up all the way here, and now it come back down, to 78%, which means there is a reduction in the price of this stock, 78%. So hedge fund, big financial institution will be looking at this stock, and they will check the financials, the cash flow, the balance sheet, all right, comparing the current liability to the current asset. This is about Google Asset Test, and then comparing also the long-term liability to the long-term, to the total assets, all right, and also checking the economy news to know exactly what is happening for this company, all right. After that, one will implement what we call a top-down trading method. This is about analyzing Murphy Oil stock by using a top-down trading method. So on the yearly chart, there was a trend. There was a zigzag being formed, bringing the price to 78% Fibonacci retracement levels. There is also a support. You see the tail of this candlestick bar here. There is a support near the 78% zone. So we can ascertain that there were buyers here, bullish traders, bullish investors that bought this stock in this zone. All right. Doesn't mean that it will quickly go up one way or another, but we just need to use now a top-down trading method to control the risk. Because we're on a yearly chart, there is a direct correlation between the yearly chart and the monthly chart. So talking about a top-down trading method, we go to the monthly chart. What is happening on the monthly chart? All right, the trend is still here on the monthly chart, and the 1, 2, 3 is still here. But on the monthly chart, I want to highlight that the first long-term equilibrium price level that one should not forget in 2017, if one is trading Murphy oil, is at $29.79, $29.79. Smart investors will look for an opportunity to buy in this zone. I will say to traders, you need to understand that we are now below that level, which is making it a bit bearish. One more thing, my expectation is about myself. My expectation is that this stock continue to go down and form a bullish chart pattern in the vicinity somewhere between $29.79 and $19.98. So something that you see here went up. We will prefer it to come back down here and form a double bottom chart pattern or an inverted head and shoulder chart pattern or any other bullish chart pattern, okay, on the monthly chart. That's my expectation for this stock, which means we will say that this price has formed a bullish chart pattern near the 78% Fibonacci retracement level, and also between the first long-term equilibrium price level and the first long-term equilibrium price level and the 1998. All right. Okay, that's my expectation on the monthly chart. Okay. All right. There is also a possibility that we may see a consolidation between the level of 2979 and 1998. So you can see stack here. If it continues to go down, it come down here. There will be buyers here. This is a support zone. Will it bounce up and continue to consolidate between 1998 and 2979? Okay, the stock will become bullish if it forms a first higher low above the first long-term equilibrium price level. All right. So on a monthly chart, there is no signal yet. There's no signal yet. If the signal is fire, we see a bullish chart pattern, or we see a bullish candlestick pattern somewhere in this zone. That's what myself I would prefer. Then we'll go to the daily chart, looking for entry. So yearly chart, monthly chart, and daily chart. This is for position traders. All right. So if you are a swing trader, you say, all right, George doesn't want to enter on a daily chart. You say yearly chart, trading setup, monthly chart, signal, daily chart signal, daily chart as entry. But as you are on a daily chart, you will not enter the trade on a daily chart. You use the daily chart again as a trading setup. Then you use the hourly time frame for the signal, and then you will enter the trade on a 10-minute time frame. So from the yearly chart, you can break it down all the way to the 10-minute time frame, which means yearly chart, monthly chart, daily chart, and then you use again a daily chart as a setup. Then you say again daily chart, hourly time frame, 10-minute time frame. But so far, there's nothing one can do as a technical trader at this point in time. There should be some signal on the monthly chart, very important. So far, there is a high chance that the stock may continue to go down to this point. But if it breaks above, there's another trend I want to highlight on the monthly chart. This trend line here, this one here, correcting this low and this low, the low of November 2016 and the low of February 2016. If you connect it, you have this bullish trend line. So just be aware of that bullish trend line. Okay. So the top-down trading method that we have done today is, in fact, for position traders, yearly chart, monthly chart, daily chart. All right. But if you are a swing trader, as you reach the daily chart, so you have a bullish chart pattern here on the monthly chart that will constitute your signal, and then you go to the daily chart to draw your channels. All right. Let's go to the daily chart. So what can we see on the daily chart? On the daily chart, the price is in this declining channel. All right, I'm going to color it now into red. I think red was good. All right. So an entry on a daily chart can also constitute about a bullish chart pattern or price breaks in the body's red channel and retesting it or forming a higher low above this bearish channel. All right. And then from there, you may say, okay, George, I'm not position trader, I'm a swing trader. Then when it's set up nicely on the daily chart, you use that daily chart as your trading setup. Then you break it down again, daily chart, hourly time frame, a 10-minute time frame. But do not forget, okay, that, bullish trend line on a monthly chart. Personally, I would prefer it to continue to go down more and to form a kind of a double bottom chart pattern. See, there was a smaller one here on a daily chart. All right, we prefer it to come down a little bit more. Or be aware also about the media line between, the 2979 and the 1998. Okay, the media line is somewhere near 2475. So there is a support here on the daily chart. See here, there is a support here. It's a support here, talking about the consolidation between 2979 and 1998. All right. So this is about energy sector, analyzing Murphy oil stock by using a top-down trading method: yearly chart, monthly chart, daily chart. For position trading, if one is a swing trader, one will use daily. One will, after one reaches the daily chart, one will break it down: daily chart, hourly time frame, 10-minute time frame. If you have any question or suggestion, okay, put in a comment section, and in due course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about energy sector, analyzing Murphy oil stock by using a top-down trading method. Happy trading to you all, and speak to you soon.